Alrighty, traders, this is Blake Morrow. You are listening to the daily, or I almost said the daily roundup. This is phase 2.0. Anyway, we're going to get started, but I want to say that if you were in the chat room, the last 24 hours, as I was mentioning, last night and today and this morning as well, you got to be careful with the yields. Yields are rallying, and it's really gotten the attention of the market, and the dollar is actually starting to rally as a result. Now, that doesn't mean that you just need to go out and buy dollars, but it is starting to catch the attention of the markets, and I think the stronger this yield move becomes in the 10-year and the 30-year, the more the market's going to start, the market's starting to believe, wow, this is the market forcing the Fed to actually consider raising rates sooner rather than later. And now we are starting to see the stock market actually show some signs of weakness. So I'm going to definitely go over the S&P here in a second, but I also want to reference just the other two equity markets in North America. One being the Dow. So you'll notice that I have a dotted line right here, and the reason why, because that's the breakout point. So if we start breaking below that, I'll look at what's happening with the Nasdaq, okay. And then you can look at the S&Ps, okay, as well. Something interesting. I was listening to Dale's interview. This guy that was Gary Kaltbaum that was speaking, and it was interesting what he said. He goes, if things were start to reverse, what you're going to see is anything and everything that worked not so good for you is going to be the best trade out there. And I'm like, well, that's obvious, but it's very true. If you've been shorting, let's say you've been shorting the S&P and you're like, man, this is so frustrating, it's not going down. It's going to be the best trade when things reverse, or if you're out there buying the dollar and the dollar is just not really moving for you, minus today, obviously, it's going to be one of the better trades out there. I mean, it's very true, but I'm going to start paying attention, should the Nasdaq start breaking down, or the S&P probably right here. Now intraday, we got to start looking at like this 39.30 level, but as you guys know, I do not care really about the stock market unless we get below 38.70. That is not to say that we can't get a pullback today. Okay. Did I put a dot there? I did. 38.70. Okay. Like I said, it's not to say that we can't get a pullback. It's just that, I'm not really super concerned about the equity markets unless we start breaking back down here below these levels. Now, today, intraday, I think we should probably pay attention to, the support down here. I know the breakout point's right here, but really this high, because we could do this kind of, imagine this, you break through, you got all these people buying right here. You break through that, stop all them out, and then bounce. You know what I mean? It takes out everybody who just bought here, gets them all stopped out, and we end up bouncing somewhere down here. So, I mean, I'll write down like 39.25. It's not great support. It's just kind of support. Okay. So. $4,000 is resistance, and we are obviously bullish, but 4,000 is definitely resistance. I would not be surprised. I wouldn't even be surprised in the least bit if we spiked up there today, just to make sure we cleaned out every short in the market and then reverse. I would not be surprised in the least bit. Not saying it's going to happen. It just, you can imagine right at the open, we do one of these, boop, stops everybody out, and then reverses, right? That's it. I mean, that would be par for the course for the market, right? As soon as the market opens here in 10 minutes, we just start spiking higher. All right, let's take a look at everything else. So let's start with, we'll look at the dollar index. So the dollar hit, now this is interesting. We hit the 618 retracement. Now we're above intraday highs. That's huge. There's a lot of people, you know, we were just talking in the chat room, what a nasty dollar move this was. I was long some US dollar Swedish krona. I got out of that. I picked it up somewhere down here. Right down here. I picked it up down here, sold it, you know, when we were above 829.50. So I got out of that. And, you know, I'm still long some dollar Mexican peso, sold some of that, which it's, you know, doing well. But we're, you know, coming right up towards channel resistance. If you guys, you know, read the morning analysis or the, you know, ForexAnalytix analysis, you know that. Anyway, the dollar index has made a nice move off the 618. This is going to be big support today. 90.12. Big. Big support. Okay. Resistance. Let's figure this out. So we have the high to low here. 38% retracements near the spike high. That's going to come in right around 90. Let's call it 90.70, because 90.70 is the 38% retracement. That spike high comes in at 90.73. So we're just going to say 90.70. And I'm going to keep us range bound. That's going to be resistance. We get above this, then we start squeezing even further. Okay, I'm going to work my way down from the euro. So here's the euro. Just as the euro was looking, you know, oh so bullish this morning, and you look at the euro, we were breaking higher, right? Breaking higher above the 50% retracement. A lot of people were short dollars. And then everybody starts to look at yields and go, whoa, yields are going up. So, you know, let's buy dollars. So now the dollar is reversed. Euro's key support here at 2080, and then you guys know at 2050. It's very sloppy out there. Resistance now. I think if you get any move back up to 121.50, you're going to get people selling, because people miss this move. They see it and they're like, whoa, you know, how did that happen? So anyway, 121.50 is going to be resistance intraday. Cable, AB equals CD, support. $138.60. Below that's like 137.60. So just, you know, this should hold today. We'll see. Okay. In the event that breaks, okay, just in case, you know, you never know. This market's going to end up being berserko today. So 139.50 is resistance now. That's pretty key. I am bullish to cable, but as you guys know, I'm bullish more on the crosses. Pound Aussie, pound New Zealand, that type of thing. They're doing well today. Aussie. So we had this ascending wedge right into the 161% extension that we hit this morning. Now we've broken. So any move back now to 77.80 is 77.80 should find sellers. 77.75 actually. So oh, by the way, this is bullish. Okay. Support is going to be down here, obviously. It comes in at 77 cents. So I think if you're trading the Aussie, this is the way to trade it. You sell rallies back to, you know, back to these levels, 77.75, and then, you know, you look to buy it back, take it back at like 77 cents. Kiwi. Here's the Kiwi. So we broke resistance, stopped everybody out right here. Basically hit the 78% retracement and fell right out of bed. So now that means this is really key resistance, 72.70. Man, gold's getting smashed. Okay. Support is going to be 71.80 again. You know, I know we wrote that down yesterday, but all right. I mean, the problem that I think that the Kiwi had, whoops, that's not what I wanted. The problem that I think Kiwi had for the bulls is that we just got a false breakout. So now, you know, a push back towards 71.80 seems possible. Dollar Canadian, big squeeze in the dollar Canadian. And you know what? Again, this is one of those not forging new lows, still building the longer term base, big squeeze. So now dips back to this previous support. Not that, I didn't want to grab that. Dips towards this previous support at 126.60 should find buyers now. So if you want to play the dollar Canadian on the long side, it's probably best to do it like that. So now let's remove this. We don't need this one. So you can see this is a 50% retracement, 618. That should offer resistance today. So I'm going to write that down, 127.05. You can see a spike high right here. So, and now any dip back down to 126.60 should find buyers. Just in case, because this is pretty strong, just in case this breaks out, I'm going to write down 127.60 is next, just in case. We're in a range. Dollar Swiss. 618 retracement, that held. Now, resistance is going to be right here. 89.50 roughly. Support, the 618 is 88. Let's just call it 88.70. Now, this is going to be significant support. Okay. All right. Dollar yen. So we got to pay attention to the dollar yen. One of the reasons why the dollar yen is going higher. Well, actually, I can name two reasons: yields, but also the move in yields and also the move in precious metals. You've got gold, silver that are really moving lower, and so this dollar yen might make a move for this 50% retracement. And if you see the high to low here, 127% extension comes in at the same level, basically. So 106.25 is going to be very big resistance. You can see this confluence of a fib level, 127% extension, right? Okay, so $105, oops, 106.25, significant. Oops, not how I want to do it. Okay. The reason why I'm going to put it as bullish for a couple reasons. First of all, you know, we're above this multi-year trend line, right? That pink line, or it's multi-month, I'm sorry. We're above that trend line. We really respected it last week. So I think it's bullish. Now, do you buy it here? I mean, if you know, obviously if you think it's going to break out, but I'd try to buy dips if you can. Now, let me get rid of this really quick. You'll notice where we held here. So this is key support for the dollar yen now. Right there, spike high, spike low, false breakdown. So that is 105.20. I doubt we're going to make it down there today, but I've got to ride it. Okay. Dollar Mexican peso. What a squeeze. Like I said, I sold some of mine this morning. I still think it's really bullish. Okay. If you know, this is the dollar Mexican pesos building a base much stronger than like the dollar Canadian. As the dollar Canadian's near its trend lows, the dollar Mexican peso is not. So this is going to be significant, especially if we could start breaking some of this resistance. So 618 retracing comes in at 20.32. I'm going to write down that number for now. And I think any dip back down right now, intraday, back down to 2010, we'll find buyers right here. If you can, if you're trading the dollar Mexican peso, trying to buy it down there seems like the most logical thing to do. If you can get it, that's if you can get it. Where am I at? US dollar, Norwegian krona. Big double bottom trying to develop here. Double bottom, big bounce. Okay, so now let's remove this. If that's the case, we don't need this anymore. So that coincides with the 618 retracement. So that is at 840. Let's just call it 846. That should be pretty good resistance today. Now, dips back down to 839 are probably going to find buyers. Because what happened here, let me just show you this. So what happened here is you got roughly a false breakdown, you know, just so if you had people that shorted the last 24 hours right here, if we dip back down towards that to this 839, you're going to get people just trying to buy it. You're going to get people trying to buy back their, you know, cover and say, thank God we got down there. But I don't know if we reach it. I'm just saying that now that we've created this little false breakdown and possible double bottom, anybody who's short wants out. Anybody. So if we get back down here, everybody's going to try to cover. Okay. That's why I think you need to be a buyer down here at 839. Matter of fact, I'm probably going to put in an order right now. And I did. Okay. Gold. Amira asked about platinum. So I'll look at it after I look at gold here. As you know, I've mentioned this before. I don't even look at gold or platinum, excuse me. Now, gold fell pretty aggressively. I was really surprised, but maybe not because of the move in yields. So we just slipped right through 1800. This is going to be really key support today. 1785. I mean, we break through that, that's pretty critical, because if we break through that, that means we are probably going to see this 1760 again, because if you look, put in an extension there, that 127% extension is going to come right into view. So, and this is going to be that low here. So that's going to be really important. I mean, I'm looking at gold. I would say a move below these lows, it's almost like this is almost like a elevator shaft move right there. Think about all the stops that are below that level. It's like anybody who's long silver, right? So I'm going to write down 1785, and then resistance now is at 1810. Any move back up there is going to find sellers. Uh-oh, the Dow's actually starting to move lower here. The reason why that's important, because if the Dow's starting to break down, what's going to happen to the NASDAQ, S&P, right? Okay, sorry, going back to gold. What was that? 18, shoot, where are we at? 1810. All right, and it's range bound. Now I'm gonna, just because Amira asked, and Stelios, if you want to grab a picture of that.
Done already.
Thank you. Let me look at platinum, and then I'm gonna pass over to you guys. Question was, where does he buy more? Wow. Hold on. Okay. Wow. Okay, so let me take a look at this longer term view really quick of platinum. That's been a hell of a move, right? Nice little false breakdown on a weekly basis. I sure as hell wouldn't want to be short that, but we need to figure out where resistance is. And that looks like about a 38% retracement. No, it exceeded it. So now this is a weekly basis. So let me just, okay. Check this out. Amira, I would not want to be long platinum right at this moment because of the rejection at the 161% extension. I would think that any dip now, and this is a weekly chart, so any dip back down towards, 1,050, maybe 1,050 to, actually, I would probably be thinking 1,050 to, 1,100, somewhere in this zone. That's where I'd want to be buying platinum if it were me, okay? Which I don't trade it, but I'm just saying, because of this 161% rejection here, I don't think I'd want to be long here because of the rejection that we've already seen. Now I'd be buying dips back down towards these levels. Okay, I hope that helps. Sorry, didn't mean to yawn. DDA, did I say that correctly?
Yeah, baby, well done, well done.
Huh?
That was perfect.
You aced it.
Yeah, man, I should be French. DDA says or asks, am I going to add Bitcoin to the bias chart? And I will eventually. What I need to do, which I'm going to do it right now. Thanks for reminding me.
Is to send me
I'm going to
the
send
file.
it to Steve, the bias chart, and he's going to make some adjustment. Matter of fact, if
Yes,
you could put silver and Bitcoin
I
on
will.
there, that'd be awesome. So I'm going to do that right now. Look at this.
And I'll also add GME.
Yes, please add GME. That would be awesome. Let's see. Where is my bias chart? Oh, here we go. There you go. I sent it over to you. Now, how you guys doing?
Good, mate. How have
Very
you been?
well. Very well.
Good. Really, really big reversal that we've seen in the dollar. And I have to say, and just let's going over to the euro dollar. When the euro was right here at the 2160, I mean, that looked bullish. We broke all that resistance at 2150. It looked bullish. And then all of a sudden, the market started to pay attention to yields. And I started warning people last night in the chat room. I'm like, you guys got to start watching this move in yields. And this rally in the 10-year and the 30-year, for that matter, are this spike higher. And you know where it started, guys?
Where?
The Boons. Boons broke down
the
yesterday.
ones I'm short, you mean?
Yeah, there you go. Well, they broke down yesterday. That we broke through this channel. And last night, I was like, I was doing the analysis for ForexAnalytix, and I was thinking that we've got to start watching yields, because right here, you can read the analysis here. I said the Boone broke channel support as yields rise and a possible break of the 147.45 key support, RSI also pointing lower. You know, and I went into the chat room. I'm like, you know, with European yields moving, you know, the yields in equities or in North America might start moving, and that's, you know, going to get the attention of some people, and that's exactly what's happening now. So I think we got to be a little careful here.
Yep.
We definitely have to be careful because, you know, we're extremely stretched, very, very, very overdone. But, you know, having said that, I remain very, very cautious. We've seen a lot of attempts of a reversal intraday, and given the fact that we're still very, very early on in the day, you know, it's promising.
Yeah, I don't think we necessarily need to, you know, be shorting equities right now. Like, you know, run out and just start shorting them at this level, because you're right. The equity markets, I mean, look at the NASDAQ, it just popped right back up. But at what point do the move in yields really start to affect the market?
Never. I'm kidding.
I mean, at what point does the rise in 30-year yields that you're seeing here, you know, and we start to get, you know, the yield curve starting
more than very temporarily, it will only matter when the market starts actually believing that the Fed is not going to do something about it. And I don't think we're there. So temporarily, the market might get a yield scare again. Oh, yeah, no disagreement there. It might. But I believe that the response is going to be immediate from the Fed. And, you know, whatever kind of reaction we get, if that's the case, if we get some kind of a yield scare, I think it's going to be very temporary, because the Fed controls the biggest part of the treasury market it has ever done. And of course, the tendency is for that to extend even further and not the opposite. So I wouldn't be betting the house on yields doing the job yet. I think they are going to end up being the pin that will prick the bubble when we get the perfect storm that will include inflation, etc. But we're not there yet. We're not there at the part, I mean, that the market actually realizes that there is definitely inflation coming and that the Fed is just bluffing that they're actually willing to do something when inflation comes. Because in my opinion, and I've said it before, the Fed is bluffing because the Fed cannot fight inflation. It cannot fight inflation with debt being where it is, with the deficits being where they are, and with the quote unquote recovery based almost solely on the wealth effect. So it pretends it knows what to do and will do it when the time comes. But I think when the time comes, everybody will realize that the king is naked, like the fairy tale. You remember the kid's fairy tale that the king was naked, and there was like the rumor that if you can't see the clothes, it's just because you're stupid. And then at some point, a little kid was like, but he's naked, and everybody then woke up to the reality that actually they all see him naked, so he's actually naked. So I think until that happens, we will keep seeing the same thing over and over again. Some short-term scares followed by sharp but short-term sell-offs, immediately addressed by the Fed, adding liquidity, making more instruments or more facilities to buy whatever they need to do, and then another leg higher.
Okay, so I guess the point I was gonna ask, and maybe Stelios, you could answer here. What happens if we start to see inverted yield curves again, like we did last year, where you start to see the short-term rates rise at a much more rapid rate than the long-term, the 30-year, like in an example, if you're looking at U.S. Treasuries. So we get a 10-year yield that starts really moving higher, and the 30 years going higher, but just not going as quickly, and we see that short end start to move higher. What does that signal to you, Stelios?
Well, we talk about yield curve inversion. The one that matters is the 2-year versus 10-year. That's the one that matters. That's the one that usually shows that, okay, we're bracing for a recession and all that. But the 10-year, 30-year, when that inverts, that's different. That will hurt the banks massively. But the long end of the curve, I know because I used to trade swaps and I used to sit next to the guys who traded 30 years and 30-year bonds and everything. The long end is driven a lot by flows. So I wouldn't pay too much attention on the 10-year, 30-year spread. Obviously, it's not good, especially for banks, as I said before. But the 2-year, 10-year is the one that you really, really should be looking at.
And by the way, I don't think it's going to invert again, Blake. I don't think it's going to invert again. Also, keep in mind that we see inversions of the yield curve before we get things tumbling down, and actually things start going south when the yield uninverts and the spread actually starts widening. So I actually believe that it is more likely that we're going to see a widening of the spread and not an inversion, so the opposite. Why? Because in the short term, the Fed looks decided to keep rates low, and I think people should believe them. I think that they're going to hold that promise. I think they are going to stay at zero for as long as they can. But on the other hand, they can control the short-term yields.
Steve, yeah. I've got to use the restroom, so I'm gonna pass it over to you so continue on. Okay.
Thanks, Blake.
All right, guys. Thank you,
mate. So, Stelio, I think that actually we're going to see the opposite. I think that the long end, which is much less controllable by central banks, will end up having much higher yields than the shorter end. So I think that's where we're headed.
Could be, yeah, could be. Yes, the yield curve is becoming very interesting. And in the US, right, they can take 30-year fixed mortgages, can't they, for housing? So
Blake is the best to answer to that question. I think you're right. I think you're right. But Blake is the best to answer to that question. So Blake was addressing the possibility of big reversals coming today. Here's the S&P. Here's the Nasdaq. These are daily right? I mean, both of them being at resistance. Here's the DXY so far on the daily, producing a bullish engulfing. After posting a lower low, now we are at higher than we were at the highs yesterday. So it's a very nice bullish engulfing. I have to stress out once again, the key phrase here is so far today, right? Here is the Aussie producing an outside black candle so far today. Here's the Kiwi about to do the same thing already with the shooting star. Here's the USD CAD. Here's the USD CAD. Somebody will easily jump the gun and say, oh, this is like a triple bottom or whatever you want to call it. You see, because we found support once again while the RSI is diverging, right? Blake already mentioned that there is a potential for a double bottom or triple bottom, whatever you want to look at it here in the USD NOK, so on and so forth. Now, keyword to all that is these are potential outcomes, because these will have some effect on the daily chart as long as we see that they close like that at the end of the day, right? Until that happens, these are candlesticks that might look completely differently by the end of the day. So personally, from experience and my trading style, I wouldn't be jumping the gun here just because they look promising as reversals intraday, right? Now, what I can tell you as a fact is that if all these FX pairs put on the nice reversals that they seem to be trying to work on as we speak, it is quite unlikely that the indices will not be affected by the end of the day. So it's not easy for the indices not to also roll over if that's the case. If you notice, crude oil was also negative at some point previously, now trying to pare back its losses. So, the bulls are struggling here with the bears to see who's going to take control intraday. Now, from a sentiment perspective, because we know that the market is extremely one-sided, it is important for the bears to manage to close the days, at the lows in, all these instruments that are like risk sensitive and risk correlated. Because I'm pretty sure that on its own can create an effect for a lot more people to start thinking, people that have been long, for example, to start thinking like, something, there's no reason for me to push my luck. After today's reversals, I think it's a good idea for me to take some profits, for example. And that on itself, fuels more selling, right? Because if you want to close, let's say, your longs, you have to sell, right? But as I said, all that are a theory based on the assumption that all these instruments close negative on the day. Another one that's interesting is the USDMXN. And why is the USDMXN interesting? Because we know that it's well correlated with risk. And USDMXN, if you notice, okay, Stel, if you notice, it's oppositely from like USD CAD and USD NOK that actually tested the lows. It is the one that actually consolidating its first leg higher in a way that was making you think more that there is at least one more leg to the upside. I remember I wrote that in the end of week analysis than anything else. So USDMXN was actually, pointing higher, and it seems to be breaking through this. You can call it a pennant, although it's a little bit prolonged, but whatever. It's like a pennant. So this consolidation, let's say, this triangular consolidation to the upside. So let's see. I mean, a lot of promising charts for reversals, but as I said, let's wait for the end of the day. Having said that, natural gas remains very nice and well bid. Gold at the lows of the day, it seems like it's going to have a bad day today, and it seems it's going to probably vindicate me that it looked like a lower low can actually be in the cards. And, I like this. I mean, I love to see a lower low here. Perhaps silver will manage to diverge. I mean, silver is having a negative day as well, but it looks like that gold can actually produce a lower low without silver participating in producing a lower low. So perhaps this is going to be a telling divergence as well. Now, silver looks heavy as well, but I mean, gold can produce a lower low while silver just goes down, let's say, to 2470, right? To this support area. So gold will have produced a lower low while silver will be showing a divergence. And I think that silver is going to be telling the truth if that happens and not gold. So, if we see like gold reversing higher while silver hasn't produced a lower low, for me, it's going to be an even better signal that, I'm going to go with silver. I mean, I trust that it's telling the truth in this case. And I think it's going to be a nice gold buying opportunity as well. Now, for a friend before that was asking about platinum, Blake indicated the zone that's of interest, but in my opinion, platinum might just, restrict itself in revisiting this nice horizontal support resistance area at 1,170 or a little bit lower towards the top end of that previous consolidation, like 1136. So I don't think that we necessarily need to dip down to like 1,050. I think that platinum, there's a very, very, very good chance that it can find support higher than that. Now, beautiful reversal so far in platinum after perfectly achieving the upside target. If you remember, since we broke out, I said that I think platinum is going to 1336 because it's the 161.8% extension of this. And it actually hit that today. It went even slightly higher than that. And it's trying to produce a nice reversal day. So, yeah, I wouldn't be trying to buy it if we close like this, but I do think you should be buying it once it finds support. And as I said, first support is 1170. I think platinum has a lot more to go to the upside, a lot. But this is not the place to buy it, right? You buy it at a decent dip. Same thing here with the cable, beautiful shooting star, exactly at resistance. So in essence, you see, I mean, the vast majority of the dollar pairs, are making an effort here to reverse. I'm not very enthusiastic, but because, as I said, let's first close the day like this, and then, we can have more confidence in perhaps trying to catch some of these counter trend moves due to expecting some follow through from people that are, that have, in essence, been on the trend for quite some time, and they might think, okay, perhaps I should, hedge my exposure or, take partial profits or whatever. Until that happens, so until tomorrow, or until, tonight that we close, I think you should be cautious. Now, following through with this assumption, if we get this dollar reversal higher, we should get risk assets retreating. And I think that's also going to play beautifully with Bitcoin and Ethereum, because we know that the risk assets, they're the riskiest of risk assets, in my opinion. And I like, first of all, how stretched they are to the upside. Second of all, how big the RSI divergence is. Third of all, how much they've become popular during the past few days among the, the retail crowd. And also importantly, the fact that they seem to be forming ascending wedges, right? So dollar manages to put on that reversal, risk assets likely to reverse lower as well. In my opinion, you shouldn't expect Bitcoin and Ethereum to keep on rallying with the rest of the risk assets getting sold off. So I think that's probably going to be, if that's the case, also the signal for cryptocurrencies to correct this massive move higher to the downside as well. Needless to say that copper should also follow in that case, right? Copper so far It was higher on the day before. It's now in negative territory, working on something like a shooting star for the time being. So, you know, might be an interesting rest of the week, but I think you should, you know, keep your patience for at least a few more hours until we close the day. There's nothing to visit about Palladium, mate. Palladium is still consolidating in a large triangle, so nothing has changed there. And don't expect necessarily something to change fast in Palladium. I've explained before the reasons why. That's it. Is there any questions we should cover? If anybody has any questions, this is your chance. Otherwise, we call it a day. Going once. TLRY. Yeah, the usual, you know, the usual bubble behavior, right? You know, yeah. I would assume something like that, or just straight lower. Yeah, the VIX. That's a good question, actually, about the VIX. The VIX, if you remember, I mentioned it yesterday at the start of the day. So the VIX did manage to close the day at multi-year lows, and today it's capping higher. Could that have been like a false move to the downside? You know, we'll know by the end of the day, right? It's not going to look, though, good for VIX if, let's say, today we close, you know, decently higher, and then we leave this very bearish candlestick and the false breakdown and the close to, you know, multi-year lows behind us, you know, like it never happened. Might be a big trap. Again, based on the assumption that the day is going to move as it seems to want to start, right? So yeah, it's not going to look good. So for the VIX as well, let's wait for the end of the day. If we confirm, so if, let's say, you know, dollar turns lower, risk assets keep on being bid, and they shake off, you know, the shaky start on the day, you know, I think this is, you know, quite a nice move from the VIX lower, and it can extend. If, as I said, this, you know, shows to be like a false move yesterday, that might actually be very bullish, because, you know, the market very frequently, you know, shakes off the last remaining, like, you know, bulls in this case, and then it moves to the upside. So, you know, perhaps that's going to prove to be the case. You know, as I said, I'm not keeping my hopes very high. One thing at a time. Let's close the day high in the VIX, I mean, now in this case, and lower in the risk assets and higher in the dollar. And then we're going to have, you know, a better case to make starting tomorrow about risk reward and interesting opportunities to trade the counter trend move that will likely unfold. Okay. Okay, so have a wonderful rest of the day, guys and girls. Bye-bye.